The S&D Group, Econ.
Thank you, Madam Chairman. 70% of European SMEs do business only in the national market. Investment programs at EU level do not really affect their operating environment, certainly not in the short to medium term. What they need is the stimulus of expansion of the national markets over the short term. Yet fiscal consolidation has drastically limited the room for national governments to push for economic expansion at the margins, which would provide the stimulus that SMEs need to grow and provide jobs. Is this not a situation where what is being proclaimed at European level is being contradicted by the consequences of such proclamations at national level?
Sofia Ribeiro from EPP.
Muito obrigada. O desafio que se coloca é o de conseguirmos manter o equilíbrio.
Thank you. We have to see whether we can strike a balance between the social and fiscal priorities. They're not contradictory, but we have to try and remove imbalances between the member states and the regions. This is why the EPP welcomes this plan. It's based on three pillars, which are all fundamental. We have to stimulate growth and intelligent investment. We have to mobilize private capital, and there has to be more expenditure which does not increase the debt. The structural reforms in the European Union, energy, transport, education and research and innovation, renewable energy and energy efficiency. And also, thirdly, we have to have more budgetary responsibility, all in a social market economy, which means social equality. Creating new jobs over 3 years is very ambitious, but it's not enough if you look at the 24.6 million people who are unemployed. So we have to organize this with European programs which promote investment, which promote innovation and research and development. And we have to create the necessary skills in the labor market. Our first doubt is whether 300 billion euros will be enough. We'll have to see how this plan will be organized in terms of existing plans. 16 billion Commission investment, is that in addition, or is this part of the total? And also, the President of the Commission announced that the task force set up by the Commission will...
The ECR.
Herr Vorsitzender, meine Damen und Herren.
Chairman, Commissioners, I have a question to address to Mr. Dombrovskis on the 315 billion investment package. You're planning a leverage effect to the tune of 1 to 15. That's 93% of the investment costs will come from private investors. It will have to be the case. The private investors will only do this if they can guarantee a return on their investments. So they should be able to refund the whole initial amount. The investments are supposed to focus on the states in a situation of crisis. That means that the citizens in those states will have to fund these investments. They will have to pay money for the use of the infrastructure of these amounts. So that means that they will have to carry a heavier burden in the next few years. So what the Commission is selling us as a present to the citizens is really an additional tax for the citizens in order to fund the Union. Second question, the Commission seems to be implying that additional investments are going to be resulting from these incentives, but that's not at all sure. It could be that there's some restructuring from investment projects that really that actually might be very risky. They really are on the borderline of being beneficial. So I don't really see that these 300 billion, that they will actually be in addition to what's already there.
From the ALDE Group, please.
Thank you, Madam Chair. My first question is to do with in-work poverty. The alert mechanism report speaks of the risk of poverty and social exclusion, that has increased by 8.7 million since the beginning of the crisis, and the differences between member states are still growing. Now, Commissioner Theyssen, you said in your earlier reply that we need more social indicators. They need to be brought in. And the alert mechanism also speaks of the introduction of these indicators. So my first question is, can you be more specific about these social indicators? And secondly, how can these social indicators be used, or how can the process be used to deal with the issue of in-work poverty? And how can the process be nuanced or differentiated to deal with the significant imbalances between member states? Now, my second question also refers to imbalances. In the alert mechanism report, again, it speaks of that some member states have not sufficiently that the surpluses in some member states have not sufficiently declined in reaction to the large rebalancing efforts of the economies that used to register large current account deficits. But you also say that current account surpluses do not pose the same challenges as unsustainable deficits and are partially justified. So my question is, what is the AGS doing to address the challenge of current account surpluses? And if they're partially justified, can you explain how, please? Thank you.
Thank you, Madam Theyssen. Hopefully you can answer all these questions in 3 minutes. Thank you.
Dank u wel.
Thank you. First, Mr. Sant, I'm pleased to say that we do concentrate on SMEs. The Parliament does too, because they have been the engine for growth in recent years. 85% of newly created jobs are created by SMEs, and what we see now is that is going down, so they're finding it relatively more difficult, and so we have to concentrate on resolving the problems they have in trying to invest so that they can recruit people. And one of the problems that big companies don't necessarily have is access to finance, because the banks are not lending, and so SMEs don't have access to financing, and it's difficult for them to have access to the capital markets. So that's one of the indicators which is part of our Think Small First programme. There was another question about in-work poverty and social indicators. I have to be brief, but briefly, how will we use them? Well, that's exactly what we are working on. We want to know not only what's going on in the member states, but we have to realize that if we are going to use certain social indicators, if youth employment is very high, if it's over 50%, if employment is very high in a certain place, then there is economic imbalance, and we have to deal with this economic imbalance, and that has to be taken into account in the governance cycle. But precisely how we do this, well, we have to develop thresholds, and in the next few weeks and months we will be working on this. We have to decide at what level these thresholds should be and how we deal with them. And as for other indicators, of course, we have to use them if we want a global view, but we have to look at the member states, and we have to make member state-specific recommendations, and that means looking at the real situation in each member state. And that is what we will be doing in the coming weeks, and we will be consulting the Parliament on this.
Thank you. You can say much during 2 minutes and 45 seconds. Now I'll give the floor to Commissioner Moscovici.
30 seconds about the last question on the increase of the surpluses in the euro area by 3 percentage points from 2008 to 2014. Obviously, it reflects the fact that on the side of creditor member states, the surplus has not or not sufficiently declined in reaction to the large rebalancing efforts among the debtor economies. So what does it reflect? It reflects economic inefficiencies with low domestic investment and demand, turning into wasted potential output on the medium run, domestically with negative spillovers to partners. And so that's the point that this Commission wants to address by promoting efficient investment to support domestic demand and potential growth. It's obviously a key priority across the board, but especially so in creditor countries, and that's a message that we delivered together with Valdis Dombrovskis about the draft budgetary plans.
Thank you. Mr. Dombrovskis.
Thank you, Madam Chair. So I would probably concentrate on those questions as regards investment package. There were several. First by Madam Ribeiro on if this 300 billion euro package is enough, so to say. I would give some idea how the scale of the package actually came. It's also outlined in the investment plan itself that if we look at the sustainable investment path, which was there for many years before the crisis, we saw investment being somewhere at the level of 20-21% of GDP in Europe. Then it went above that level before the crisis, during the boom years, probably reflecting some overheated real estate and construction markets in some member states and so, which was also not a sustainable development. And since then, it has fallen substantially below this pre-crisis level of 20 to 21% of GDP. And this shortcoming is somewhere between 230 and 370 billion euros. And this figure, which was initially announced 300 billion, or what's now in the package 315 billion, is actually more or less in the middle of this range, just to understand the logics where the figure came from. Then to address the question of Mr. Lucke on whether this investment package will not end up as some kind of a hidden cost or tax to the citizens. You mentioned this leverage ratio, which of course means that clearly the idea of this package is a limited amount of public money to unlock larger amounts of investment of private money. That's the idea because of this package, which means that with the help of the private money, we are providing some possibility for first risk absorption. But then to address your second part of the question, I think one of the criticisms which is now being addressed at Europe, at its member states, is the following. We are having record low interest rates, at least in most of the places, and yet we are not using this opportunity to invest. So it's quite clear that the investment will have some cost one way or another, whether it's paid directly via budget, or it's paid via this investment package, or it's just private investment. At the end of the day, someone will pay for that investment. But then the question is, if the benefits of this investment, if we create functioning energy market or invest in energy efficiency or address some infrastructure shortcomings, if the benefit of this investment is not bigger than the cost, and that's the idea of the investment in general. So it's quite clear that it's important to select also the right investment projects which provide this benefit, and there is strong considerations given to the governance of this package, that there is not political meddling, but that its decisions are taken professionally. There is substantial part of this package devoted to the lending to the SMEs, it's quite clear that we need to look into this, that the benefit of this package outweighs the cost, but that's clearly the intention. Thank you.
But who bears the costs, Mr. Dombrovskis? You didn't answer the question. Isn't it the citizens?
Very short answer.
Well, as I said, of course it depends on a specific project, but at the end of the day, the costs will be bared one by another, whether it's through the public money, through the taxpayer, or through the business, which then puts this cost in the his price. But at the end of the day, it's important that the benefits from this investment should be bigger than the cost. That's the idea of the investment.
Thank you. Then it's time for the third round. 1 minute, 30 seconds each for shadow rapporteurs, and 10 minutes in total for the commissioners to answer your questions. Don't hold speeches. Put the questions on the table. Mikael Teurer from the ALDE Group, the floor is yours.
Ja, vielen Dank, Frau Vorsitzende.
Thank you, Madam Chairman. Commissioners, I have a question to Mr. Dombrovskis. In Latvia, you have a very impressive recovery program that you've undertaken. Other countries find it more difficult. Would you agree with me that France and Italy need to take their fate into their own hand and do something similar? In Latvia, it's not just a question of equality or justice, that the small countries are actually implementing the requirements. Others find it very difficult. And so, bearing that in mind, the question of competitiveness rears its head when it comes to these imbalances. Export surpluses are being criticised here, but export surpluses are required for the European Union as a whole, aren't they, if we want to encourage growth? In Germany, 40% of the value of every car that is exported comes from outside. So anything that happens there is actually positive for the whole of Europe. How are you going to implement these measures in the European Union, given the diversities that currently exist between all the member states?
Madam Theyssen, starting. Okay, we'll continue with the questions to be as efficient